What's good, guys? Welcome back to another video. In today's video, I'm going to get into the best possible Bitcoin trade setup for today. And not going to lie, today is looking just as, if not a little bit more uncertain as compared to yesterday. But before we get into this video, if you're new here, welcome. My name is Xuan. I've been making these daily trade calls on YouTube for the past year and a half, and I've been publicly documenting the success rate. So far, we're sitting at about a 75% win rate across 200 trades or so. So if you're new here, just understand that you're probably in the right place because I tend to be right a little bit more often than I'm wrong. But with that out of the way, let's get into the video. Now, just to kick off this video, so far, the weekly kind of like scenario that we painted out in Monday is playing out so far. In terms of the fact that, okay, in terms of the overall higher time frame, we are incredibly bearish. Not only is market structure bearish, but we also have order flow being bearish as well. Now, besides that, last week we came into this fair value gap over here, which, by the way, accurately called, and we ended up taking a short from that point onwards. That was perfecto. But this week, because of the bearish weekly bias, we're actually looking for shorts heading into this week. And because of that, we expected Monday/Tuesday to be somewhat of an update where, Monday came into this bearish fair value gap over here, which means that this is very likely to be the high of the week already in. So for the rest of the week, I think we're just going to be looking for shorts targeting towards 60,700 and potentially $59,000. Now, this is not just kind of like some concept that I'm pulling out of thin air. This is the same concept that I've used to not only predict last week, we're going to find the top of the week sometime between Monday and Tuesday, and then the rest of the week down. This is the same concept that I used to also, understood the fair value gap. This is the same concept that I used to, for example, tell you guys that, hey, like we are not going above this fair value gap. There's very high chance that we're going to go down towards the downside. In fact, parents, feel free to put on the receipts of just the type of YouTube thumbnails that I was making back then, right? I was screaming at the top of my lungs for you guys to sell. Same thing back in, what was it, like November, December last year? No, actually January. This is the same concept that I used to kind of catch all of those moves. And in terms of what's going on this week, this is most likely going to be the high of the week. Now, I'm not saying that this, concept is infallible, but so far, like everything that we painted out, since Monday, like if there was someone who did not understand trading at all, and if he were to be watching my videos, he might think that I'm a bit of an oracle because it's not the first time that I've done this. Now, I'm not tooting my own horn here, but as long as you understand just liquidity and if you understand PO3, it goes a really long way to showing you the true kind of like movements or like the underlying mechanisms of like the market. Don't get me wrong when I say that. I do not claim to understand how the market works. It's just that I've seen this play out time and time again to the point where I would think this is a working kind of model. But with that out of the way though, in terms of the daily chart, right, just because we have a bearish bias does not mean that today is going to be the day where we can actually take advantage of this knowledge to make some money, right? This was the thing that I was alluding to at the start during the intro where, okay, let me just show you what I mean. If you go down into the 1 hourly chart, you will see that, okay, price has actually filled in this bearish fair value gap. And so this makes this line right here, the line that we want to see where price gets a CISD below, the line that we want to consider to enter into a trade towards the short side, right? And the thing that makes today not the best day, in my opinion, is for the fact that we do not have news today. Now, for those of you who don't understand what that means, if you go onto this website called Forex Factory, you will see that you can filter by the economic calendar, and this red folder news here for USD is the one that we want to be paying attention to. And today we do not have any such, red folder USD news. Now, the reason why this matters is because you need to understand the market always has a reason behind every movement. Now, oftentimes, if you're pumping, it means that you're going for some sort of a bearish, it means that you're going for some sort of a liquidity level. Sometimes it could be an inefficiency, like what we've seen here on this fair value gap. Sometimes it could be targeting a liquidity level. This is the same concept that I use to identify these daily targets that I think by the end of this week, we are going to hit. So that is, the objective in terms of price action. And for most people, that tends to be the be all end all, which is the price action, right? Oh, where's price action going to go? Or where's price going to go? But what most people fail to realize is that on your chart, you have two axes. You have the y-axis, which is the price action. A lot of people are already looking at that. But you also have the x-axis, which is time, which kind of dictates, right? When you have red folder news, it means that everyone is looking at that piece of news and everyone is expecting something to happen. Now, we may not know if it's going to go up or down, but we do know that something's very likely to happen at that time. And when you are operating in days where you do not have red folder news, what tends to happen is that the market can stall. It's exactly what happened yesterday because we do not have red folder news either. It means that the market does not have much of a reason to move aggressively. And it's also the reason why I told you guys yesterday, like, hey, with whatever trade that we're going to be entering, we're going to be very cautious. The two ways that we are going to be cautious is to A, wait for extra confirmations compared to a usual day, and B, whatever trades that we do take, we're going to go half risk instead of our usual amount of risk. This is to account for the fact that we are operating in slightly lower probability market conditions. And case in point, now that we look at this in retrospect, yes, ultimately price action gave us the confirmation that we needed, right? This is the CISD. And once the CISD happened, I posted a trade on Twitter, which, by the way, if you guys would like to follow along with all of my trades, I post it all on Twitter. Like, it's not gated behind some signals groups or whatever. If I take a trade, I'm going to update it on Twitter. If I have an update to the trade that I took, I'm going to update it on Twitter. And so just understand that even though everything on price action lined up, the reason why it didn't play out has to do a lot with the market conditions that we were operating in. And today is no different. We are dealing with a non-news day, which means A, we want to be more cautious. How do we be more cautious? We wait for confirmations. And the confirmation that we're going to look for today is going to be the CISD over here, right? We need to see a 1 hourly candle close beneath this level before we even consider it. And this level, by the way, to anyone who is watching from a small screen, is $62,600. If we do not see that candle close beneath this level, we are not going to be even considering getting into a trade. Now, B, even if we do consider getting into a trade, we are going to go half risk for the reason that we at the moment have relatively equal highs above this level. And the reason why relatively equal highs matters is because a lot of people, and I mean like a lot of people, tend to look at relatively equal levels as like, oh, this is a strong resistance level, or this is a strong level or whatever. But the key point here, the reason why this matters to our system is that relatively equal highs and lows tends to be a magnet for price. Price tends to be attracted to these levels, sweep them out before moving in the other direction. If you've ever seen this happen before, this is likely why. And again, I don't claim to understand that this is the real way the markets move, or I don't claim to understand, oh, this is blah, blah, blah. It's simply, I've seen this happen time and time again, enough times to where I can conclude that, hey, even though I don't know anything about it, it is a working model. And for this reason, we are going to go half risk, plus the fact that we don't have news today. So at exactly what time should we be looking for this stuff? Well, between the hours of 7 a.m. to 10 a.m. New York, which, by the way, if you're not familiar with that, that is known as the New York kill zone. It's just like how, if you go into the 5-minute chart, right now we are operating within the London kill zone, which is 2 a.m. to 5 a.m. And the Asia kill zone is 8 p.m. to 12 a.m. Now, these are just simply higher probability windows where most major market moves tend to happen throughout the day. And the reason why they're major, like there are a lot of conclusions that, people tend to draw when it comes to this, but just based on my understanding and the way I like to think about it is that these hours coincide with the major opening hours of the major market in the world. For example, 2 a.m. to 5 a.m. London is a little bit before the London open market. 2 a.m. to 5 a.m. New York coincides with the opening hours of the London market. These hours in the Asia kill zone coincides with the major opening times of Hong Kong and Tokyo and even Sydney to a certain extent, although probably less. And of course, the New York kill zone starts a couple of hours before the New York market opens, and it lasts an hour into the actual New York market open. So these are just high probability times where there tends to be a little bit more volatility throughout the day, and so that's why we look at these kill zones. That's why we only take all of our trades within these kill zones. Remember what I talked about before, you have two axes on a chart. You don't just look at price action. The best trades are always when price action and time aligns. Just because, like in yesterday's case, was a perfect example of like, okay, in terms of price action, everything lined up, but because we were operating in a subpar time, or just subpar x-axis, it ended up lowering our chances of success. Same thing for today, and same thing if you ended up trading outside of these kill zones. So all in all, like if I do jump into a trade for today, I'm definitely going to update it on X, but I'm going to say most likely today's going to be a no trade day for me, at least on Bitcoin. Now I'm still going to be looking for trades on other assets, which I'm going to do with the live trading call that I'm running with Bootcamp and Blueprint later, which by the way, if you enjoy my philosophy on the market, and if you would actually like to tap into a system that works, feel free to click the first link in the description box below. But otherwise, I'm going to see you in tomorrow's video and potentially later on X. Ciao, ciao.